Finance is its own language, right? It can feel like this secret dialect spoken only on Wall Street, designed to keep the rest of us out. If you don't know the lingo, you can't even get a seat at the table where real wealth is built. Well, today, we're smashing that barrier. We're not just going to give you a dictionary, we're going to connect the dots and show you how the whole system works. First things first, let's set the scene. You've definitely heard of bull and bear markets. These terms describe the overall mood and direction of the market. Think about how a bull attacks. It thrusts its horns up. That's a bull market. Prices are rising, investors are optimistic, and everyone's making money. Now picture a bear attacking. It swipes its powerful paws down. That's a bear market. Prices are falling, pessimism is in the air, and fear is the dominant emotion. So bull up, bear down, simple. Now what makes these markets move? It comes down to two powerful opposing forces, liquidity and volatility. Liquidity isn't just about cash in your pocket. It's about how quickly you can turn an asset into cash without losing its value. For example, stocks are highly liquid. You can sell your shares on your phone and have the cash in your account in seconds. On the other hand, real estate is illiquid. Selling a house? That can take months, sometimes even years. You can't just snap your fingers and turn your house into cash at its full value. High liquidity gives you flexibility. Low liquidity can trap your capital. The other force is volatility. This is just a fancy word for how much an asset's price swings up and down. Think of it as the market's heartbeat. High volatility, like you see in many cryptocurrencies, means wild price swings. It's a roller coaster ride. High risks, but also the potential for high reward if you time it right. Then you have low volatility, like with government bonds. Their prices are much more stable and predictable. It's the safer route, offering steady but lower returns. Your personal tolerance for these swings, for this volatility, will shape your entire investment strategy. There's no right or wrong answer, just what's right for you. So you've decided on your risk level and you're in the market. How do you actually make money? There are two primary ways, capital gains and dividends. A capital gain is the profit you make when you sell an asset for more than you paid for it. It's the classic buy low, sell high strategy. You buy a stock at $100, the price goes up to $150, and you sell it. That $50 difference is your capital gain. You only get this money when you sell. Dividends, however, are a different game. A dividend is a portion of a company's profits that it pays out directly to its shareholders. You get paid just for owning the stock, whether the stock price goes up or down. Think of it like getting rent from a property you own. So capital gains depend on the stock's price increasing, while dividends depend on the company's actual business being profitable and sharing that profit with you. One is about market sentiment, the other is about business fundamentals. A healthy portfolio often has a mix of both. This brings us to the most crucial concept of all, asset allocation. This is the single most important decision you will ever make as an investor. Asset allocation is simply how you divide your money among different types of assets, mainly stocks, bonds, and cash. Do you put 80% in stocks and 20% in bonds? Or maybe 60-40? This decision, this percentage split, is everything. In fact, numerous studies have shown that over 90% of your long-term investment returns are determined by your asset allocation, not by picking the perfect individual stock. It's not about finding the next Amazon. It's about creating a balanced structure for your portfolio that aligns with your goals and your timeline. By understanding these core concepts, bull versus bear markets, liquidity and volatility, capital gains versus dividends, and asset allocation, you're no longer on the outside looking in. The market stops being a confusing casino and starts becoming a logical system that you can navigate with confidence. You now speak the language. Thanks for watching. If you found this helpful, make sure to hit that like button and subscribe for more content that breaks down the world of finance. See you in the next video.